Welcome to New Jersey Cannabis Business Association's Lunch and Learn. Today, we're very excited to have Bill Betts, the managing partner at Canna Real Estate Group. Before we get into a great conversation with Bill, and he's got a lot to share, I'm really excited about this one in particular because it's really going to be impactful for the rest of the industry. But I'm going to thank our sponsors first. We have Sprague Energy, they're a preferred energy provider. We have Financial Resources Federal Credit Union. We have Curaleaf. We have HBK CPAs, Burton Trent Public Affairs, Township Green, Protethus, 420, Saks LLP, Dutchie, Puffin, Canna Remedies, DM Labs LLC, and Netta Architects. So we have all these great sponsors here for our Lunch and Learn, and I want to remind folks out there that please, utilize the please utilize our chat. And also being reminded here right now, we have this amazing event coming up next Wednesday, the 21st at Johnny Mac's in Asbury Park. We go to Johnny Mac's regularly. It's part of our networking event series, but you're going to have a great time. It's time to celebrate summer solstice, celebrate Pride, all in the cannabis space. So we're really pumped up about next week. Hope we see you there. And then, so let's just dive in, Bill. So provide a little bit of your background, your company, and what's going on in Colorado.
Well, thank you very much, Scott, and thank you, Jenna. A quick shout out to Jenna and to Anastasia Pinson, who works in our office. When Anastasia and Jenna get together, good things happen for us. So thank you, ladies, for organizing this. My history, Scott, and the emergence of and the positioning of the Canna Real Estate Group is really basically a 10-year journey. It started for us in the West here. I'm based in Colorado. I've had a 30-plus year commercial real estate career here in Denver. Based in Denver, though my previous firm had opened up offices all over the country. And when Colorado went from medical only to medical plus rec back in 2012, we started with some cultivation projects here in Denver, and the rest is history. We spent, of that 10-year span, we spent a number of years here in Colorado, of course, cutting our teeth on the industry. Some good stories, some not so good stories. But we wanted to share that message with other new licensees and other operators in Washington and Oregon, which we did. So then let's go into like the 2015, 2016 timeframe. As the industry continued to grow and emerge in the Midwest, we had done some work with Illinois, Michigan, and Ohio licensees and operators in all three phases: cultivation, manufacturing, and retail distribution. And we had learned a little bit more there, and we had some more success stories and a few not so successful stories. And now with the emergence of the industry in New Jersey and New York and Connecticut and Maryland, it became a natural step for our company to put a presence in North Jersey. We have an office in Montclair. We're there about every month. We started coming to New Jersey in mid-2021. I tied up a piece of land for one of our contractors and one of our licensees pretty quickly, and that was the emergence of our positioning in New Jersey. We've seen a lot of growth. My intention and our company's intention is to bring resources to new licensees in the great state of New Jersey. Side note: I spent my summers on the shore at Point Pleasant, so there's a personal thing for me, but. We wanted to bring our resources and our experience to new licensees and new operators in New Jersey. That's why we're very proud members of the NJCBA, and glad to be here today.
Awesome. That's great. And I really want to pick at a little bit of your background in Colorado, right? Yep. So New Jersey, yeah, sure. We've had legalized medical cannabis for a very long time, recent adult use. We're going through a process of licensing right now. For a lot of people, it's a frustrating time. It's an uncertain time for others. It's very exciting. They're getting their license. They're getting to open up. But that's the market as it sits today. What a lot of people want to know is, like, what's the market going to look like tomorrow? And I think one of the, what you could use as evidence of what the market will look like or could look like is looking at Colorado, the very first state that legalized adult use. What was it like in the beginning? You were there, and what's it look like today?
Well, thank you, Scott. That's a great introduction. And from a historical perspective, when Colorado passed Amendment 64, and we became an adult use state, two things happened. There was an absorption by some of the larger out-of-state operators. There was an absorption of what I would consider to be independent operators. And those larger operators have put some of the new licensees and new businesses under their umbrella. And then there were those in that segment that could survive because, much like you, they had done proper planning and they have secured real estate in a reasonable market-friendly atmosphere and at a reasonably acceptable pricing structure. And they know how to operate their businesses and watch their cash flow. So those businesses, Scott, that may have secured real estate in a vacuum or have paid too much because they believed the extortive tactics of their landlords or of sellers or of those property owners' leasing representatives, those are the people that had struggled because they secured something that is not sustainable from an affordability standpoint, okay? So the successful operators in Colorado for the last 10 years have all been doing well in remarketing positions. There are a few groups that have decided to withdraw from Colorado because it's a mature market. So some of those operators have pulled out of Denver and are now focusing into Michigan, Massachusetts, New Jersey, and Maryland because they've made their margin here. They've made their real steep upside in Colorado, and with more operators, so does the price of the commodity become a little bit lower. So the margins are a little bit thinner in Colorado today than they were 5 and 7 years ago, right? So some of those operators are expanding into newer markets where they can regain that and recapture some of that share and some of that upside.
So for the folks who are indigenous here, right? So there's, we have a lot of folks who have a couple thousand folks really who have received conditional licenses. I think the idea for a lot of folks was that, and when people started this process in New Jersey, they were looking at this in 2019, 2020, 2021, and like getting really excited. They submit applications and they submitted conditional applications. They got their approvals. And I think a lot of people felt like, I got my conditional license. I just shopped this around. I'm going to get funded. That's just not happening right now because I think the length of time, inflation, interest rates, an uncertain market in New Jersey. There's a lot of factors that people go. So how do you, when you're looking at New Jersey and you're looking at qualifying and working with people in New Jersey for real estate acquisition, for financing, what is it that you look for and how do you help these folks get through a process?
Well, great question, Scott. And we knew that after 2 or 3 years of operating the Canna Real Estate Group in the West, we knew that the one glaring factor was access to capital, right? Licensees don't need us to go find a building. Licensees could use us to help them make sure that acquisition is properly structured. And we can also supplement that activity, Scott, with access to capital. And that can be in equity participation, that can be in bridge, mezzanine, construction, short-term debt, or that can be in permanent debt. Depends on where the borrower is in that cycle. But I think it's fair to say respectfully that there is a pause in the market activity in New Jersey right now because of two factors. One of which is that the licensees who are looking to acquire their real estate may be facing difficult challenges in acquiring money right now because money is a little bit more expensive than it was last December, and that money was more expensive than it was 12 months before now. So there's consideration number one. I think consideration number two, which is a very real market condition, you won't see it on billboards and you won't see it on someone's hoodie and you won't see it in a trade group function, is that there is now a secondary market being available. And that secondary market, Scott, is composed of licensees who have tied up, and by that term, I mean proposed letters of intent, purchase contract, or lease documents. They have tied up a piece of property without the ability to close on it, whether that's equity or whether that's debt service. And so therefore, there are a couple of different licensees in cultivation, processing, and in retail that have what I would consider to be an opportunity that they will never operate. They'll just sell it, right? And that competes with the original market statistic of that we have all seen for the last year. That is taking some of the pressure, in my opinion, that's taking some of the pressure of landlords off the concept of inflating their buildings just because they're in a green zone, because it just doesn't work.
No, and I think we're seeing different things with regards to like the green zone, and particularly in retail. I think there's a lot more flexibility when it comes to cultivation, a lot more acceptance as well with cultivation and manufacturing. Because they can be in warehouse, they can be 100 yards off the road, they can be in a lot of different scenarios. And I think towns, when they look at dispensaries, the visible structure, they get concerned. And we're watching in my area and other parts of the state clusters. So you're seeing dispensaries like literally next door to each other, right across the street from each other. They're going to be competing. And our concern, as an industry group and other players who are involved, is that we don't create some sort of race to the bottom of everybody sort of trying to undercut themselves. So like
Right.
where you're located, I guess my point is a critical factor. So when you are as a retail operator, I'm looking for places to find. What advice do you give as far as to ensure that you're not going to be piled up on each other?
Well, I would think of, Scott, that's a great question. I would think that, let's back up a little bit to the licensee who has an opportunity to be in that certain green zone municipality, right? We published an article last year that the real estate acquisition work that's coming to New Jersey, we wanted to have our clients and our prospect be aware that this is very much a public-private enterprise, right? The licensee needs to speak with planning and zoning before it look at real estate, because why would you look at something that's not eligible for cannabis? But in
Right.
terms of timing and execution and competition, I would ask questions to the licensee. If that municipality is prepared to issue you a letter of resolution and the space works, not just price, but ingress, egress, power, signage, all of those things that are important to any retail business. If the space works for you, go do it and pull the trigger and sign the lease and write some checks and go get in business. Because if you don't, someone else will, right? And then it's up to that retailer to distinguish itself from its competition, which might be across the street or downtown, a block
Right,
away,
right.
right?
So
Because what we found, Scott, is that locationally, in all the markets where we've worked, and I want to encourage your retail people with this concept. Once you're up and operational, and you're on Weed Maps and you're on Leafly and you're promoting your dispensary, if clients can get into and out of your parking lot and the parking lot is safe and well lit, that's the first step to being successful, in our opinion.
no, that's very sound advice. Absolutely, parking is going to be an issue, particularly for the early adopters, the first ones out there. Like just getting the access will be
The customer, Scott, will be drawn to a licensee's brand, and they will be drawn to the retail dispensary's location and the products it sells, as long as it's located in a safe area. And we've seen that out here. A very good friend of mine I've worked for 10 years has a small dispensary, literally a block from I-70. It's in a super congested area near one of our sports complexes. And the building is nothing special. It is what it is, but it's making money every month. And he does very well in that location. And so don't let the specifics of a location dissuade someone from making it successful. A really well-located business with a lousy operator and terrible retail things for sale might have a tough time.
Right? Yeah, no doubt about it.
It's the operator too.
Well, it is. It's how you set yourself up. It's your branding, it's your marketing, and it's your interactions with the customer. The larger license holders, right? So the cultivators, manufacturer, they're not customer focused necessarily. Well, of course they are, but they're not retail. And they are about building brands, and they are about building their own presence, but they can be located strategically wherever. It's not as pertinent as retail. So
with technology, with the technology that's out there, Scott, the retail dispensary operator can use those platforms to draw customers to its store.
No doubt about it. Yep.
Easy.
So, but shifting gears, I want to get, because you offer your company offers so much, and you have so much experience in this space, and it's tumultuous right now. So there's a lot of uncertainty. A lot of teams that were started out a couple of years ago, they've broken up, they've fallen apart, they're struggling for investment. Part of what you can do for folks, though, is help to qualify them. You find property, help qualify their business model, you help find funding. So tell them like more. So if I want to be a cultivator, what would you need from me? What would you look for from me for you to want to invest in my efforts?
Hey, Jenna, is this a good time? Can you pop up that slide? I'm not sure if Jenna has that. Great question, Scott. So there are really a couple of basic principles of what it is that we do and what we can help our prospects with. And once we convert them into clients, we can help them in this process as well. So yeah, we have I have very intentionally surrounded ourselves. There we go. Thank you, Jenna. I have surrounded myself and our company has surrounded ourselves, Scott, with really great collaborators from architectural, engineering, construction, and finance components. We have access to and work with and have partnerships with all of those different functions that are cannabis specific, right? These are people that we have designed and built and financed buildings with around the country. And they've closed and they've worked and their operations are up and moving. But it's really basic, Scott, and we put this together for a contractor friend of ours last year. And the model is real simple. If a borrower is going to come to us for a project request, our first ask is, well, tell us what you have. And that's the black box in the middle of the image that you see here. And if an operator has enough cash and enough imputed real estate equity in a building that they want to pursue, those are the two black boxes that you see on your screen. If they have those two components, and here's the big one, and they have the ability to pay their debt service, which is the green box that you see at the bottom, and they can pay that debt service from acquisition to the certificate of occupancy, which you see in the lower right-hand corner. If they have those two components, there's a likelihood that we can help them secure debt. That would be the red box. It's that simple. And now what you'll see in that image, Scott, is a matrix that shows the equity and the debt components being equal. Well, let's think about who the operator is. If the operator is a larger group that has success and has cash flow in other markets or other cities or other states, it might have a little bit more financial horsepower. Therefore, the debt box might be a little bit longer than the equity box, right? If, however, we are talking with an operator with limited cash and short valuations on their commercial real estate, and they might not have the ability to finance their debt all the way to a certificate of occupancy, that red debt loan amount is going to be a little bit smaller. So what we try to promote, Scott, and to our friends in the audience, we try to promote, let's build what you can afford, right? Even though you might have a higher tier cultivation license that permits you a canopy of X square feet, talk to us and let us help you about what that construction cost is going to be, because we've done it. And if that's out of reach financially for what you have and what you will be asked to pay, then don't do it, right? If you have a 50,000 foot canopy requirement, but you can only afford to build 10,000 feet, let's build 10,000 feet correctly and engineer that build for future growth, because you can afford it and you can be in business sooner than stressing out about something that might be financially out of reach for the asset base which you have today.
No, that's a challenge. I think that is the challenge. That's the big challenge, because for a lot of folks, when they started out here, they were anticipating that money would be flying off the table and everybody's going to want to invest. And right now like I said, we're literally sitting on thousands of conditional licenses that are struggling to move forward. And therein lies, I think, the big challenge for folks like you and other investors. Like, which team do I invest in, or what if I need a service like yours to acquire that property, get support from a town? Like, there's so many different things involved. What you need to show to qualify to get your type of support, but other types of support as well, other types of investors. So what can I do aside from the money side, right? So if I can go and raise money, that's fine. I can help bridge the gap to secure some external financing. What do you look for in a team, though? Like, what are you looking for in that group of folks who've never started a company together, or maybe they have, but for going to be the first time in cannabis? Like, what do you look for?
Great question. What we look for is an operator that has the courage and has the financial horsepower to get operational and to be in business and to stay in business for a while. Because our view is much shorter range view, Scott. We look at from investments from our side, we look at what does this operator have and can show and can display to us its ability to stick with this and work it through the first 2 years of its operating forecast. And let's look at things that the business wants to do in the middle of that time period to make sure that the business isn't going to get off track and can make sure that it is focused on this specific opportunity.
Yeah,
right.
I think,
there's another component to that, Scott, from a private equity standpoint as well as a debt standpoint. I would encourage our listeners today and our viewers today and our licensees that are out there, put yourself in a position that you can display to the lender and to your landlord that you can perform, because the landlord and the lender are asking themselves, is this entity going to be around long enough to pay us our rent, or to buy the building, or to fit out the equipment, or to buy the chillers for the new air conditioning system? Put yourself in the lender's shoes and the landlord's shoes of your ability to perform. And if there are any doubts in your planning, let's talk through that, or revisit it, or lower your construction costs. And we've also made this recommendation, Scott. If what a licensee is trying to do with a piece of property in a certain municipality, and it feels too much like a square peg in a round hole, we'd recommend to extend your conditional license if you can, because the CRC allows operators to do that. Extend your license, take a deep breath, and look at another building, and go engage with another piece of real estate, because that will make them feel better that that's not their only option. And because we've seen it out here, Scott, we've seen so many circumstances of people starting out their operation in an amazing journey with great upside. But why would you start that journey with your foot in a bucket by paying too much for your real estate, or not structuring your build or your debt service corresponding?
Yeah, and I think that really comes down to the issues at hand. And we have a question from Elizabeth, and very long paragraph, so I'll try and summarize it. But the challenge is that when we legalize cannabis, the voters voted. It's now part of our constitution. It's there forever. The challenge is that 70% of the towns opted out, which is ironically about the same number or same percentage as Colorado. So when Colorado first went legal, only about 30% of the towns opted in, and it became an issue for folks looking to find real estate, looking to find that right, the right town to operate in. When you watching Colorado mature, and I know more and more towns started to opt in when they saw the tax benefits. They saw that crime wasn't as what they thought it might be. What's the sense of timing, do you think, where New Jersey towns will start to open up more?
I think the timing is happening right now, Scott. I think because of the from the state's perspective, the state sees not quite the return that they thought they were going to see in terms of licensees being operators, right? And so I think the state wants to encourage some of those opt-out townships and boroughs to opt in, and some of those townships and boroughs that were on the fence in January of this year or in June of last year are reconsidering its position to access the potential tax revenue. You're exactly right. I spoke with an existing operator Wednesday morning, and he has in New Jersey, and he indicated that they're just going to wait, and they're going to wait for more counties to opt in. That brings in more opportunity, that brings in more real estate opportunity, and with that increased real estate inventory, so will it push down the pricing from the already opt-in counties and townships and boroughs that haven't had any real estate activity. Why? Because the sellers and the landlords have priced it too expensive.
You're right on. And
I have a conversation with a group next week, and we're going to have a little conversation about building valuation. It's that simple. We can't pay what the seller wants. We'll look at alternative possible profit sharing matrices down the road, but we're not going to pay what the landlord wants us to pay just because he thinks it's funny. It ain't funny. We're going to do it right. We're going to do it right. And sometimes these conversations are hard, but they're based on truth and fact and valuation. They're not based on year 5, 10x revenues, because that's a daydream. That's not real. Not yet.
Not yet. And I think that's another really important part is all these valuations, all these projections, they really are unknown. I mean, hopefully most people have some basis of fact based on past experience with other folks to different markets and so forth, but it is unknown. So I know from personally, what investors are looking for, what they're scrutinizing, and it's really hard to project right now in New Jersey. And I think if you can, and this is for everybody, if you can be patient, I think is what you're saying, Bill. But
correct.
Making sure you're doing it correctly the first time. And if it takes a little longer, working with the town that's not opted in, maybe work with that town to encourage them to opt in, things like that.
When we talk, great comment. When we talk about cultivation and processing, Scott, in specifically in North Jersey, that's where most of our activity is today. I want to reassuringly comment to some of our licensees and some of our operators to, once again, let's not think about ourselves. Let's think about the people that are approving this project. Let's talk about planning and zoning, and let's talk about people that have never done this before. People in planning and zoning in XYZ borough in North Jersey haven't done a 100,000 foot commercial cultivation facility in their careers. So we want to be mindful of that. And we want to help that process to be successful, and that takes time, and that takes patience, and it takes collaboration. Scott, you're exactly right. My first cultivation project here in Denver. My client, who was a college friend, I went to University of Colorado, go Buffs, and my college friend said, "Hey, this is about 10 years ago," and he said, "Can you help me get a warehouse? We're going to grow weed. We just got a license." Okay, fine. And he was in such a hurry, Scott. We tied up this great little building, probably built in the 50s, amazing barrel roof building in Northeast Denver in our green zone overlay submarket. And we were in such a rush to lease this property, which we did. Nobody asked about the power. Well, there wasn't any power to the building. So guess what I did the day after the lease was signed? I got into the power transformer and electrical switching business in a hurry, because I had to learn how to get power from the street into and through the building. And so it's patient, and it takes a while, and new licensees will have to understand that some of their municipalities, planning and zoning and building departments have never done these before. So be patient and don't rush them, because it will just expose their fear, and then it's going to be a tough project. We don't want to do that.
No, and all sides of this is risk. All sides. Your side as provider of different services, the side of those who are like willing to sign up and take on this debt, take on this responsibility. I mean, I wake up, sometimes in the middle of the night because I'm going through this process myself in a retail situation, dispensary, and it's all of a sudden it's like, holy crap! Excuse my language, everybody, but oh my goodness, how's that? I'm going to own property. I'm going to have employees. It's something that all of a sudden it becomes very real. And if I've never done this before, there's that sort of anxiety of making sure that I do it right. And I think one of the things that you said just a little bit ago, I think waiting for that right opportunity, not rushing this, making sure your team is ready. So when you do go talk to someone who may invest in your company, provide the service, provide the whole package, that you have the confidence in their ability to go and execute.
And sometimes that discovery process, Scott, from engagement to loan funding and a commercial real estate deal, our process takes between 60 and 75 days. And the first part of it can be uncomfortable because we delve into business plan. Who are your partners? What are they worth? What's your real estate? What's it worth? Because we'll know pretty quickly whether this is a well-positioned opportunity or not. But I'm grateful for the opportunity to share our experience from the West and from the Midwest with operators in New Jersey, because these projects are very doable. It takes courage, but the result at the end of the journey is a new life and a new opportunity and a new way of living. We take great pride in working so closely with our clients because we get to uplift their families. It's that simple.
Isn't
right?
that great? I mean, isn't
Yeah,
that exciting?
We get to uplift everybody's family. Yeah.
It is one of the most exciting parts of this business is just this great opportunity, an opportunity for this, not satisfying yourself and providing an income, but generational wealth as well is the opportunity that's out there for a lot of folks. And I think that's the part that is just, we're in this moment. We want to make sure that we're doing it right. We want to make sure we're avoiding different pitfalls. I'm going to give a shout out to Sprague Energy, for example, because they are New Jersey Canada Business Association's preferred energy provider. But that's a cost savings things that I think a lot of people aren't thinking about is who's your energy provider, who's sourcing your energy, and can you go do source that around, particularly for cultivation manufacturing. So companies like Sprague are very valuable in this process to help reduce costs.
Very much so. Very much so. We like to look at things. We like to look at things, Scott. From it doesn't matter what your cost per square foot is to acquire that retail store in XYZ town. The price of that real estate matters, but in the bigger scheme of things, we'd like to look at total cost of occupancy. What's it going to cost you to be in this building? And if it's less expensive on a per square foot basis than the one across the street, but has redundant power, backup water, backup fiber, great wireless, the first building, though it might be a little bit more expensive, might be a lower cost building to operate over a 5-year hold. So that's our perspective. Yeah, if you want fast and cheap, you don't need us.
No, it's about
I'm
quality.
not sure it exists.
No, seriously,
Sure
that's perfect, man. That's perfect because that's what you really want. You want to make sure that it's got to be a quality job all the way through everybody. The individual teams that are coming together, who they're working with, their accountants, their attorneys, how they set them up structurally, and then as they're working with you and finding the right location, that's all very important. So look, we're going to wrap this up, Bill. This has been amazing. I think it's been very valuable to the entire group listening here. So I want to give you a couple things to, final comments, but I want to share with everybody that one of the things that Bill has offered to our NJCBA members is a 1-hour free consultation. So if you are unsure, Bill's contact is in the comments section, the chat section. But look, reach out to Bill, reach out to his team, get pre-qualified, have a better understanding. You don't want to go into this and all of a sudden find yourself 6 months into a process. You ran out of money because you just couldn't afford what Bill was saying. You started too quickly. You got the building that was too big for you, and your funding dried up. So it's really important that you follow this and reach out to Bill. He's made himself available. So Bill, the floor is yours for closing.
Well, thank you very much, Scott, and thank you, NJCBA. Thank you, Jenna. To all of your attendees and listeners today, I'll be in Montclair all of next week. I'm happy to meet you for a coffee if you'd like to do that. Feel free to send me an email. I do spend Friday mornings doing business development. Most of the other days of the week, I'm good Lord willing, working on projects. But I do spend my Friday mornings, and as Scott indicated, I'm happy to talk to anybody for a little bit of time and see if we can help you in any capacity.
Fantastic. Thank you again, Bill. Again, want to give a great shout out to Bill and his team at Canada Real Estate. Canada Real Estate Group. Thank you. My room got dark all of a sudden because it's raining outside, and so I feel like I'm in this little area. But thanks, Bill, for all your help there. I want to again give a shout out to our sponsors, Sprague Energy, as we just mentioned earlier. They are our preferred energy provider. Financial Resources Federal Credit Union. They are a fantastic organization. Curaleaf, Burton Trent Public Affairs, HBK CPAs, Township Green, Pothesis, 420, Saks LLP, Dutchy, Puffin, Canna Remedies, DM Labs LLC, and Netta Architects. And don't forget, we have an event on Wednesday, the 21st at Johnny Mac's in Asbury Park. We'd love to see all you guys there. And Bill, again, I can't thank you enough. You've been absolutely fantastic.
Anytime. Anytime, Scott. Thank you.
All right. Take care, everybody.
Hey, everyone. Thanks.